Chinese economy is said to have grown at a faster than expected clip in third quarter. GDP numbers for July to September came in at about 4.9% from the year earlier. The data was released by National Bureau of Statistics, and analysts at the same time were expecting a 4.4% increase. Remember, this is slower than 6.3, 4.9%, slower than 6.3 expansion in the second quarter. On a quarter-on-quarter basis, GDP grew at 1.3% and accelerated from a revised 0.5% in the second quarter, but above the forecast of 1%. Consumption, industrial activity picked up and has surprised on the upside, suggesting that a recent flurry of policy measure is finally helping the country bolster its economic growth and progress. Chinese economy, a lot depends on Chinese economy. It's the second largest economy in the world, and the consumption in Chinese economy actually is a growth driver for the rest of emerging markets. It appears that China is coming back on track. The policy measures taken by the Chinese government seem to be paying off.
So it's tough to say at this moment just looking at data from one quarter, Shweta. So while 6.3 to 4.9 has been a slower quarter-on-quarter growth, and has, despite that, it has beaten the estimate of about 4.4, 4.5%. But yes, there is, I think, no doubt right now that consumption seems to have picked up marginally in China. Now, again, consumption in China, the large driver of consumption, the large driver of domestic growth in China has been the real estate market. But we've seen what's happened with Evergrande, and we are seeing that even Country Garden that Krishna reported in the morning today is on the verge of collapse, or is on the verge of a default. Now, I think all this states that property is one sector which continues to be slow in China. The global economic scenario is not auguring well for exports from China to the rest of the world, and the tensions between US and China, and US once upon a time being the largest, I think still continues to be the largest importer of Chinese goods, but is now shifting bases to countries outside of China, not auguring very well still for China. So I think there's a larger geopolitical, geoeconomic play right now, which will eventually define whether this number of 4.9 or this trend line of growth year on year or quarter on quarter is going to sustain or not. But I think, to put it very, very simply and absolute bare bones, we can sit and take pride in the fact that Indian economy is poised to grow at 6.5% this year, as compared to China's estimate of growing at 5%, China's own economy to grow at 5%. And with this 4.9% higher than expected number coming in, it seems that China's 5% target is more likely to be achieved now. But simple point being, China is almost a $20 trillion economy, India is a $3.7 trillion economy, right? China growing at 5% means in about 13 years, rule of 72, where your size doubles, your growth doubles, or your principal doubles depending on the rate of interest. So rule of 72 suggests that even at a 7% even at a 5% growth rate, China is going to become almost a $40 trillion economy in about 13 years from now, 2026 or so. Whereas India, growing even at a 6.5% rate, at best will be able to become perhaps nothing more than a $7.5 trillion economy by about 2035 or so. So the gap between India and China will widen in absolute numbers, even if India continues to grow at a faster clip than China, because China is sitting on a much larger base. So I think our interest lies in China not growing at 5% and India growing much faster than 6.5%.
All right.
So I think 5 trillion, while a big number, great number, aspirational number, turn of the decade, 5 trillion is not going to cut it when it comes to us competing with China.
4.9%, even at 4.9% growth, China is going to outgrow India, in a magnificent fashion.
My only question at this stage is that, you always, when you talk about data from China, first, you'll have to take that with a grain of salt. That if this China telling us that, our slowdown is actually not as slow as you think it is. So it's China, and that's essentially coming after months of measures taken by the central government of China to stem the rot in the economy, bear in mind. So, I mean, for me, I have to take these numbers with a grain of salt as a semi-PR exercise by China to let people know, hey, we're not exactly in a downward spiral. Yes, we did find a bottom, but we're on our way up. is seemingly the
We
picture
are
that
bottomed out, and
Yeah.
the only way forward is the way ahead, perhaps. That's the message.
Seemingly.
That's the message
But also the
coming
fact
in.
that China was, unlike the rest of the world, in a deflationary scenario. So there were fiscal measures taken
course.
and monetary measures taken of cutting interest rates at a time when the rest of the world is increasing interest rates to prop up domestic demand.
So growth
perhaps,
had to come.
Perhaps there is something to look into the fact that domestic consumption is maybe picking up. Is it picking up at 4.9% or not? We don't know. The data is made in China.
All right. So we'll of course have to wait and watch out for whether those numbers are true or not. We'll keep tracking those stories.